Okay, so now we start looking at these non-financial performance indicators. But before I really go into them, I just want to I've worked through a question, TYU4, which I want you to kind of have a look at before you kind of watch this video and then sort of see what I'm doing. So let's just talk about non-financial performance indicators really. What we're talking about here is we've been talking about financial indicators for a while now: liquidity, performance, profitability, gearing, risk. Now we have to always, sometimes from time to time, read a scenario that's given to you to be able to extract non-financial performance indicators as an additional tool in looking at performance and maximizing long-term profitability. So a company usually will choose a mixture of the two so that they can actually, of course, improve, if you like, improve profitability. So you can see they've come up with a few ideas really here, but these, a firm will focus on a number of areas that they're very good at, and they'll try and do well there. So it might be low prices, or their quick delivery, or customer satisfaction, if you like, strong brand name, wide range of products that people can choose from. But again, what we're really able to do, if you like, is understand that non-financial indicators are able to monitor what's really causing. I think I highlighted here. If we want to know what's causing the financial performance, we want to understand what's happening behind those figures. Right. So I'm just gonna take you to a question, and it's TYU4 in your book. And what they want from you here, please read this, but you can pause, read this, and sort of get the gist of what's going on here, and then click back on. So you have this business here that provides advice to clients in 3 different departments by offering consultation with specialist staff. And so there's a budget and there's an actual, and they sort of want you. So that's the budget. So you have, typically they expect about 50,000 new inquiries, but 30,000 inquiries from previous customers. But this is what actually happened. And then from those inquiries, you see they actually extract or actually get 15 of those 50,000, and 12,000 of the 30,000 repeat orders or repeat requests for information. 12,000 are repeat. And you have exactly the same thing here for actual, where you have 80,000 inquiries are made, but 20,000 of those are turned in, if you like, are actually taken up. And for repeat business, 20,000 are made. You have 10,000 taken up. And they give you the mix of the client consultation. So it tells you how many are medical. So this is the actual client consultation here. So new business and repeat business, if you like. And so you see here that they're telling you the 6,000 of these here. They don't tell us which the medical is in, which one's new and which one's repeat. Just in general, 6, 12, and 9 for medical, dietary, and fitness, which makes up that 27. It's the same thing. It's just a broken down version. And the same thing here: 5,500, 10,000, and 14,500. And then they tell you the number of consultants employed who are actually servicing these consultants. So these guys are doing these consultants. So six consultants are dealing with these 6,000, 12 dealing with 12, 9. So you can see these are all 1,000 each, and you would do exactly the same here. And they give you some more information. So here what they're ultimately trying to get you to do is to prepare a kind of income statement. And you're just literally following the process of preparing the income statement based on the receipts, or the selling price for each of these new businesses and repeat, less all the relevant costs. Now, the good thing about this is because this is management accounting, there's no set layout. So what I had done was I had kind of laid it out this way. It doesn't really matter as long as you have a layout, and kind of found a way of dealing with all the revenue and just looking through the question, writing out all the costs in general, and then calculating, if you like, the margins as they're requested. So if you could do the same thing and have a go at that, you're literally just trying to work out what the revenue is, if you like, and what the relevant costs are. When I say relevant costs, the variable costs and all the other fixed costs. And you can work out profit and things like that. That's not too tricky. The bit I wanted to concentrate on was here, where it says suggest ways in which each of the following performance measures could be used to supplement the financial results. So we've got financial results. We now want to sort of see what's going on. So this first business is about competitiveness. This is really to do, again, like I say, because it's not financial accounting, you have to sort of think outside the box a little and push yourself. So you have a scenario here, you're saying, how competitive are you? Are you able to get those customers? You had 80,000 people inquire, and you were only really able to convert 20,000 of those. So that's about a 20 divided by 80, right? So that's, if you like, a 25% conversion, if you like, but a 50% conversion with existing business. So that's maybe some good customer loyalty. You already know them. So that's the key point. There seems to be good loyalty, but lately you've not been able to convert those. If we look at budget, if you look at the budget and look at repeat, you have business. You have 12 over 30. 12 divided by 30. 1 second. 12 divided by. Oh, right. 1 second. 12 divided by 30 is 40%. So you have a 40% conversion with the budget for repeat business. And the actual is actually better. The actual conversion on repeat business was better. So, but in terms of competitiveness, I suppose it's the new ones. So you have 20 over 80 and 15 over 50. And so really you didn't do as well as you should have based on the budget. So you can see, of course, being competitive. These are all the things that we can use as external measures. Why aren't we being competitive enough? Why aren't we able to convert those business inquiries into consultations? Then, so you can see to a certain extent there's a variety. You really could, so flexibility really. So let me just take you sort of to the answers, and so we can see some of the things they're suggesting, if you like, here. But I'm focusing on B because you can work out this bit yourself and then support your answers. So that was competitiveness. And flexibility really relates to how you can kind of mix things up, so to speak, and adapt. So they're just giving us some examples. So flexibility may relate to the company being able to cope with the flexibility of volume, delivery speed, job spec, just adaptation. And you're just talking about it. Additional fitness staff have been employed to cope with the extra volume of clients in this area. Yes, and that was talking about additional staff and fitness staff being able to cope with clients in that area. So let's just take you to the actual information. So they've brought in, and then here it talks about medical salary staff. So they've basically dispensed of some full-time staff and brought in some subcontracting. So what you could do is you could look at the cost. So the medical salary before you had medical salary here of it's given to us here. Yes, so medical 40 grand. Consultants are each paid a fixed annual salary of 40 grand. So I guess with medical you can see here that you have 6. Yes, here we are. So it says client consultations include those carried out by outside specialists. They're now 4 full-time, carrying out the remainder of the consultations. So you could multiply the 6 times the 40 grand, and you get 240, versus this kind of new scenario where you've now decided to get rid of all of those, and if you like, now just have the 1,900 consultations that you have, and you're paying $50, and that's really 1,900 times $50, which we see over here, and that just comes to 95,000. Here, this is just for the one. I need to multiply that by the number of consultants that were in medicine. But the point is that what they've done basically is they've outsourced, and that's a degree of flexibility. They've outsourced the medical costs to save money, really, if you like, to save money. So you can see here, there we are. That's the 40 grand times 6. That was 240, but they've adjusted that. So the point really is that these look at this. Let's look at resource utilization. So here we have, for example, it's really asking us how well are we using the staff we have to generate output. So for example, here you have 6 medical staff, and you have 6,000 medical consultations. So you could argue that there's 1,000 here, there's 1,000 here, there's 1,000 here, right? Because these consultants are doing this work. And then what you can then do is compare that with what actually happened. So if we look at that relationship, what we see is that we can see that we have slight differences. So this was the budget, but we see that only 900 were done here, 833 and 1,208. So there seems to be an underutilization here of those staff. Why weren't they able to do 1,000? Why weren't they able to do 1,000? What happened here? But here the fitness staff have actually done more. So there's an overutilization or an improvement. So fitness consultations seems to be carrying out many more consultations than budgeted. So is it really, it's really trying to understand the story. Are they keeping the same quality? But what we can also see is that customers aren't happy because customers are complaining, if you like, because if you see here, customer complaints have gone from 270 to 600. So so those are the sorts of things you see here where they talk about here quality and innovation. Innovation, they've just bought this new machine. You can see, so new computer software, so we can start to measure if we're getting better results as the use of the machine. And again here, this innovation and fitness costs were increased by this 80,000 to the higher equipment to allow sophisticated cardiovascular testing. So we can see that to a certain extent, it's all written, but we are aware of what the question is. What am I going to be using? What am I going to be writing about? You can see here, it talks about the quality of service is the totality of features and characteristics of the service package. So what are the new events that are coming in to improve quality of service? Quality of service, the cardiovascular testing, innovation, for example, the new computer software, improving the quality of appointment scheduling. The key point is, what new processes are we able to bring in, if you like, that we didn't have before? Or the effectiveness of the process. So you can see it says may also be viewed. So there's no one right answer. It's just really being awake to how we improve things within the organization, processes, customer satisfaction, and find a way to kind of measure it and relate it to something. Okay, great stuff. So that was that. So please have a go at this question and just read it thoroughly, and that will help you when you now start looking at in the exam kit as to the sorts of things to look for in an exam question.